Hi, my name is Pat Keown. I'm a senior research analyst with Refinitiv Lipper. I'm here to speak to you about fund flows activity for the week ended Wednesday, October 7th. We'll start this week's report by looking at the overall fund flows results for each one of our fund asset groups. As the slide indicates, equity mutual funds suffered net outflows last week, about $3.7 billion left. Taxable bond funds and muni bond funds both took in net new money at about $7.4 billion and $1.5 billion respectively. Money market funds suffered another net outflow this week. They saw $20.4 billion leave their coffers. We'll take a look at the market activity for the fund flows trading week. The Dow Jones Industrial Average, NASDAQ Composite Index, and S&P 500 Index appreciated 1.9%, 1.8%, and 1.7% respectively. Despite the overall positive returns, it was a choppy week of trading for stocks as the markets experienced some volatility due to the talks around the second stimulus package. At the start of the week, there was optimism as both sides were talking, both political parties, and Federal Reserve Chairman Jerome Powell emphasized that a second stimulus package was vital to sustain the country's economic recovery. But this momentum was lost on Tuesday, October 6th, when near the end of trading for the day, President Donald Trump announced that he was halting talks on the bill and they would not resume until after the election. As expected, the markets nosedived on this news and all three equity indices closed down more than 1%. However, before the start of trading the next day, Trump whipsawed the markets with news that he would be open to talking about a number of smaller individual stimulus bills, such as bailout money for the airlines, payroll protection for smaller businesses, and another round of stimulus checks for individuals. The markets reacted enthusiastically to this, and the three indices all posted increases approaching 2% for the day. Hopes for some type of additional stimulus package also pushed the yield on the 10-year Treasury note up more than 10 basis points during the week, and it closed the week at 0.79%, which was its highest close in almost 4 months. Let's turn our attention back now to the fund flows activity for the week. We'll start with our equity mutual fund groups. We'll take a closer, more granular look at the results for each fund asset group. Equity mutual funds, as we previously mentioned, saw $3.7 billion leave last week. This was their 24th consecutive weekly net outflow. The net negative flows this week were driven by domestic equity funds at $3.4 billion, while non-domestic equity funds chipped in $276 million to the total net outflows. We'll move on now to equity ETFs. This group also saw money leave last week, approximately $2.3 billion net. As the chart indicates at the bottom there, the largest net outflows belong to two ETF products that are tracking a broad market index, the SPDR S&P 500 and the Invesco QQQ. So $6.2 billion and $1.8 leave respectively. We'll take a look at our taxable bond fund groups now. We'll start with mutual funds. This group had net inflows last week, took in $7.4 billion of net new money. As the chart indicates, the previous week, the last week of the third quarter, they had net outflows of $1.7 billion. This net outflow broke a weekly net inflow string of 24 consecutive weeks. So it looks like they got back on the positive side of the ledger this week for the fund asset group. On the peer group level, the largest contributors to the net inflows were ultra short obligation funds and high yield funds, which took in $1.9 billion and $1.2 billion of net new money respectively. We'll move on to taxable bond ETFs now, which also saw net inflows last week. They took in $7.9 billion of net new money. As we look at the top of the chart, we see a treasury product leading the way, followed by two below investment grade ETFs. iShares 20-plus year Treasury bond ETF had net inflows of $1.4 billion. That was followed by the iShares iBox Dollar High Yield Corporate Bond ETF and the SPDR Bloomberg Barclays High Yield Bond ETF with net positive flows of $1.2 billion and $785 million respectively. Our next fund asset group to review is muni bond funds. Net inflows here again for this group last week. They took in $1.5 billion of net new money. This is telling a very similar story to the taxable bond mutual fund group that we just looked at. As you see, in the last week of the third quarter, they suffered net outflows, about $660 million left. This net outflow broke a streak of 20 consecutive net inflows for the group. And similar to taxable bond funds, they've started the fourth quarter off on a positive note with a fairly significant net inflow for the fund asset group. At the fund classification level, we see the two biggest contributors are both national muni peer groups. Short muni debt funds and high yield muni debt funds had net positive flows of $531 million and $363 million respectively. Our last group to look at is money market funds. As we mentioned earlier, net outflows for this group again last week. This makes 9 straight consecutive weekly net outflows for money market funds. They had $20.4 billion leave their coffers this week. The majority of peer groups saw money leave. The majority of money market fund peer groups saw money leave last week, led by institutional U.S. government money market funds and institutional U.S. Treasury money market funds, with net outflows of $16.1 billion and $9.3 billion respectively. That concludes this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.